I'm Alex Makovica for the Rural Radio Network. Let's tune in to this week's Weekly Market Roundup program presented by the Nebraska Soybean Board. A few things happening in the week of market trade. We kicked off the week with a couple of reports from the USDA that were highly anticipated for the grain markets. And then, of course, a few days following, lots of news when it came to tariffs. We'll break down all that activity after a word from our sponsor.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Alex Makovica back with you on the Rural Radio Network. Darren Frye of Water Street Solutions kicks off this week's conversation to break down everything that happened when it came to tariff news and how it impacted grain trade. Darren, we could touch on a number of things this week, but a big headline, of course, is tariffs, trading news, a lot of things happening here in the last couple of days of the week. Shape up how it affected the markets. We've got some big downside swings on some of these complexes.
Boy, we sure do. I mean, there was a lot of markets that maybe were affected more so than what people maybe were expecting. Cattle, for example, have had a really hard correction, but they've been up for so long and they needed to correct, and this was the stimulus to do that. I'm not sure we've done any severe technical damage to the cattle or the feeder cattle if we stop here. Now, if we continue to accelerate, that's a different story. But you take the corn, for example, this was negative news with tariffs from our administration, President Trump's administration, then, of course, the retaliation of China here in the last day or so. And we've seen the market really get whipsawed and mostly pressured lower. I think a lot of people are expecting the tariffs to be a certain amount. And, of course, Trump didn't telegraph what he was going to do, and they were a lot more severe than a lot of people expected. So you have this risk off, not only inside of our grain markets, but the outside markets as well, with the indices being down hard, the dollar being down, the metals being down, everything's been hit. And so then you get into margin calls, and margin calls mean people either have to liquidate or ante up the money. And so this is just fed on itself as we've gone through the week. It started out kind of benign with a crop report earlier in the week, but once these tariffs hit on Wednesday and retaliation into Thursday, really the floor has kind of dropped out of some of these markets.
Well, you bring up a great point because a lot of this was expected on Wednesday, but news kind of trickled in over a couple of days. Do you think that had a bigger impact than hitting it all in one day, Darren?
Well, I think it was kind of I don't know. I can't answer that, but obviously it was a staggered effect. And, if people thought, ooh, we dodged the bullet on Wednesday, not too bad. Well, then Thursday and Friday here, we just toppled the market. And I do think that certain commodities with really good fundamentals like corn, even though we have a lot of new crop acres coming, we know we have a tight balance sheet. We know the stocks report didn't present a lot of surprises. And with this tight carryout, corn really performed pretty well over the last couple of days.
If you're just joining us, Darren Frye of Water Street Solutions is joining us for this week's Weekly Market Roundup to recap some factors influencing this week's market trade. When it comes to tariff news here in the next week or so, what do you think these complexes need to see in order to, if not end positive, at least not end so much lower?
Well, I think they need to see some things get resolved. And we know that the weekend's coming, and obviously over the weekend, you could see some of these countries buckle a little bit, maybe give in, and it ease some of these pressures. Right now, it's a stalemate. It's a standoff. And I think if we saw some positive news over the weekend, people getting things worked through and settled, different countries coming to the table, I think you'd see the market rebound next week. And one of the interesting things, corn's up, beans are down with this tariff news. And we had a 2.24 corn to bean ratio during the insurance setting period of February. Well, after the last couple of days, that has even strengthened. It's 2.2 now. And so if we thought we were going to get more acres of corn and less acres of beans, and this keeps up through planting, we'll even get more acres of corn and less acres of beans. And at some point, that's not bearish beans. Beans will come roaring back here at some point.
All right, the corn and the wheat, we mentioned before that they have not been as volatile as the soybeans have. When do you see a time when we start trading weather across these grains? Does that come into play, do you think?
Well, I would think so. Alex, that's a great point. The weather out in the plains and the Black Sea is supposed to get some moisture over the next 10 days, but we got some dry areas in the northern hemisphere that are going to affect wheat country. And as it comes out of dormancy, a winter dormancy, into that spring tillering, that's an important time to have some moisture. And so I think that's the first crop to be affected. And then secondarily, as we start to plant and get into June, obviously the row crops would be affected then.
All right, let's round out this conversation with what producers need to be thinking about when it comes to those marketing plans. Like we've mentioned, a lot of news to absorb. What do they need to be thinking about, Darren?
Well, right now, I think somebody, if I was giving advice to anyone, I think those somebodies that are listening out there need to basically just sit back and watch what happens. I mean, anybody that sells this in the hole or buys a big bulge is probably going to get hurt. I think we'll rebound back. I don't think I would panic and sell this in the hole. Corn obviously acts good, but soybeans, I'd wait for a rally. I think the real play could be as we get into May and June, if things are going well, corn might be the one that gets more acres and has to be really hedged hard, where beans might end up having fewer or less acres, and we might see those rebounds. So right now, I'd probably do nothing, sit on my hands and wait for a rally.
That was Darren Frye of Water Street Solutions. The second portion of our program, breaking down two big USDA reports at the beginning of the week. Our own Bryce Duskett sat down with Jeff Peterson of Heartland Farm Partners to break down the numbers and why they mattered to the trade.
We're going to focus our conversation around activity early in the week when USDA released a couple of reports. The first is the prospective plantings report, surveyed farmers all across the country. They gave their information back to USDA. They published the number of 95.3 million acres of corn set to be planted, 83.5 million acres of soybeans. Your thoughts on that report and those numbers?
Yeah, it was really interesting to see. Interesting to see how the numbers came out, but then how the market traded it. If you look back at that 95.3, that's up 4.7 million acres from where we would have been last year. But if you really dig back into the numbers, what you would actually find is that rotationally, we actually are just kind of going back to a little bit more than we would have been a couple of years ago. So that was really no big surprise. And then you come over there on the bean side, 83.5 million acres on the beans. That number's down 3.5 million acres from where it would have been last year. And with everything we've seen, it started really with last fall. If you think about kind of that switch from acres that were going to go from beans over to corn because of the yields and the uncertainty about how soybeans are going to yield, and then you throw in the prices where we're at and the profitability discussions that are out there. So really, I really agree with where the numbers are out there, Bryce.
Okay, so this survey is as of March 1st. Is there anything that happened over the course of March that you think could change farmers' minds at this point to plant more soybeans as compared to what they originally said?
Well, as of right now, I don't really think there'll really be too much in there. Now, what you could end up finding is that if you had a few people that maybe hadn't reached out to their seed dealers to check on their hybrids, and then in a lot of these cases, they'll be going corn on corn, that could change a few items on that. I think the bigger thing that's going to change that number going forward actually is going to be what our weather is going to be like. What I kind of think we could see is that ultimately if we have a really open spring, and the way it's setting up, we don't know yet how it's going to go, but if we do have a really open spring and we really get stuff planting really under good conditions, then that would really mean that we'd probably see a few more acres of corn and even maybe a few less acres on the soybean side. But I think it's going to be more based on the spring and the weather, Bryce.
The other report that came out from USDA is the quarterly stocks. As you digest all of the information, because there is a lot nationwide, plus a state-by-state breakdown of where various commodities are, whether at the farm level storage or in commercial. What are you trying to glean from those reports, and what stood out to you?
Yeah, there's really two things that we always look at as we dig into the quarterly stocks numbers. What we're looking for is we're looking for confirmation on USDA's really demand numbers to say, are we on pace to hit where their numbers are? And what was interesting, at 8.151 billion bushels on the corn side, when we compare that to last year, that's down 201 million bushels. Came in really close to what the analyst estimates are. In our opinion, what that means is that we know that export sales are ahead of pace. We know that of what USDA thinks we'll have for demand. We know that the ethanol production is ahead of pace. So overall, that for us means that I think down the road we'll see some tightening of stocks additionally in future WASDE reports down the road. As you dig into the soybean side, came in at 1.91 billion. Now that was up 65 million bushels from last year. Not really too big of a surprise. Some of the surprises, though, that really do stand out as you dig into the state numbers. I'll give you an example here for Nebraska. Nebraska's actually got 135 million more bushels of corn in all positions than we would have had last year. That's up over 16%. And the bigger ones over on the soybean side, as we take a look at that, we're up almost 24 million bushels, which is 20% from where it would have been last year. And that's just looking at where stocks were as of March 1st. Now, how we use the information from the state level, that gives us a good idea to kind of how we watch basis in the different areas, Bryce.
So a lot of, we'll just assume, unmarketed grain still in storage that farmers need to move here, right? Am I reading what you're saying correctly?
Yeah, there definitely is, but there's a big difference compared to last year. The difference that we find is that the stocks that are actually on farm are actually pretty comparable. The additional stocks are actually off farm and in the commercial hands. Doesn't mean that they've physically been sold already, but they're in their hands. What that really means is that the farmer, when we had that price run up, I think they moved quite a few bushels. That makes us a little bit more optimistic about what basis could be as we go into April, May, and then on out into June and July.
Okay, let's continue that theme of looking big picture. Based on these assumptions, the prospective plantings report plus what's available in the quarterly stocks report, what kind of prices could we be looking at here? We look a couple months out, but even bigger picture when we come out to the fall.
Yeah, what we always like to do is once we get the quarterly stocks numbers, and in particular once we get the planting intentions, then we like to take those numbers, go ahead and plug them into some balance sheets. First thing I want to really look at is that what would we expect if we ended up having acres as they were forecasted and we end up having just average weather. Nothing special, just average weather. If we look on out to where we'd be at harvest time and we dig in and starting first on corn, the corn number would suggest, and we'll take the ending stock number, which would be around 2 billion bushels. We divide that by the demand, we get a stocks to use percentage of about 13.8%. When we take that 13.8% and look at the October WASDE report and say what would we expect for a price, that would bring us in right around the $4 level. So that gives us an idea. Now, does that mean we should go to $4 today? No, of course not. We've still got to factor in what's going on for weather here in the U.S., how many acres actually get put in, also what's going on in South America also we have to take into account. Then we come on over to the soybean side. Because we're pulling acres back on soybeans, that really does get quite interesting. And really some of our first estimations would bring us that there'd be ending stocks of around 290 million bushels. That'd give us an ending stock percentage or stocks to use percentage of about 6.5%. Surprisingly, that would give us a price of about $11.50 come harvest time.
That'll do it for this week's Weekly Market Roundup, again presented by the Nebraska Soybean Board. For the Rural Radio Network, I'm Alex Makovica.